Good afternoon, everyone. It's Saturday, August 13, 2022. George DeSantis here. Um, in lieu of the family meeting that I usually have on Sunday, because we have canceled tomorrow's meeting, I decided to do a YouTube video and take a look at the market. I refer to this as the look at the market. I've been doing it for years, sharing it with some family and friends. Let me bring up the disclaimer so that we know that, for example, this is not any attempt to recommend stocks to any particular person. I'm not a licensed professional investment advisor, and therefore, if you need such advice, you should seek one out. You should seek a licensed investment advisor. So I'm going to start by doing the usual. We're going to take a look at the general market, take a look at the S&P, for example, on the weekly, the daily charts, see what we can glean from them. We'll take a look at the Qs, the NASDAQ, and then we'll go on to look at some other charts and documents, etc. We'll end up with Shaken Analytics and taking a look at some individual stocks that look interesting, that may be candidates for trading in the coming week. So let's begin. So we'll start as usual with a weekly chart of the S&P 500. I admit it's a bit crowded. However, every one of these things I have on a chart, of course, has some important significance. So I'll try to make it as clear as possible for you as we speak about these indicators, etc. Where do we begin? I usually like to look at the moving averages as an indication of the trend of the market. Now, before we go further, I'm very fond of Larry Williams' work. I used to attend his live seminars in the city for many years. He's been around for over 50 years, and I've been attending his workshops and looking at his work on the internet, etc. And so I've learned this from him. He claims that when he's looking for good candidates for of stocks for trading, and in fact he applies this to futures as well. There are a number of things that he looks for. If he's going to buy a stock or an ETF or futures, the first consideration is it trending and in what direction? So is there a trend? The second thing is there momentum in this trend? Is there momentum? And the third thing is the stock being accumulated or distributed, which is the accumulation distribution indicator that he created. This one down here, see Williams AD line and the moving average of 57. So that's the third thing. He also likes to consider seasonality. Is this a good time to be buying a stock or the other whatever ETF or future or whatever? He also has his own proprietary chart patterns, cycle analysis, etc. So what I've done is, for some time now, I have adopted the first three, especially the first three criteria that Larry Williams emphasizes: the trend, the momentum, and the accumulation distribution indicator. Is the stock being accumulated or distributed? Is it being bought or sold? And you can say the same thing for an index. So let's begin now by keeping that in mind, by looking at the trend. So the first thing we want to look at is the position and relative positions of the moving averages that I use. I use a 4E exponential moving average, which is this yellow line, okay? I use a 9 exponential moving average and a 30 front weighted moving average, the green line. So the yellow is the 4, the 9 is the red, and the 30 is the green line. Okay? Now, insofar as the relationship of these averages is concerned, you could see that the 4 EMA on the weekly chart just crossed over the 9 recently, 3 weeks ago, okay? And the 9 is approaching the 30. Hasn't quite got to cross above it yet, but it's approaching it. So insofar as moving averages go on the weekly chart, we have begun to see an uptrend here. The other thing I like to look at for trending purposes, whether we have a trend or not, is the parabolic. These white dots are referred to as a parabolic. Now, the parabolic, if it's below the most recent bar, it's the beginning of a trend. It signifies the beginning of a trend. So for the last 3 weeks, the parabolic has been indicating to us that we now have an uptrend in the S&P, okay? So that's one of the ways that we look at the trend as well. I do, anyway. The other thing I like to look at insofar as trend is concerned is the ADX. Now on the ADX, we still have the DI, Directional Movement Index, DI plus above the DI minus, DI minus above the DI plus, but you could see that there's an indication here that they're converging on each other, and it appears from everything we can see here, from the direction of movement anyway, that the DI plus is looking to cross above the DI minus, and the ADX itself, although we had a trend all the way from here, that was beginning of the year in January, because the ADX was trending up, right? The histogram was getting higher and higher, and the DI minus was above DI plus. You can see that this has been changing somewhat here. The personality of this has been changing here. So now the directional movement, directional index, the ADX is trending down. Now, in order to have the ADX indicate that we have an uptrend, we need to see the ADX come down and start trending up, and we say, well, we have a trend. And now that doesn't tell us anything about the direction of the trend, but insofar as the direction is concerned, if the DI plus is above the DI minus, we can conclude that we have an uptrend. ADX is trending up, saying we have a trend, and the DI plus is above DI minus. So if and when that occurs, we will get confirmation of what we are seeing here as an uptrend on the weekly chart. Now, we can also use MACD as an indication of the trend, although it's also considered a momentum indicator. Okay, so insofar as trend is concerned, you could see that MACD histogram has been shortening up from about here, which was June 24th. So on this date here, June 17, the market made a bottom. See right here, right? June 17 is when we had that bottom. And MACD histogram started trending up from below the zero line. If you read Alex Elder's book or Jerry Appel's book on the MACD, because Jerry Appel invented the MACD indicator, you will note that they say in their books that one of the early entries into the market could be when MACD starts trending up from below the zero line. It is a more aggressive entry strategy, but it can very well be used as an entry signal. So let's say, for example, you intend to hold 100 shares of whatever, the SPY, for example, the ETF of the S&P. You might buy 20 shares when it starts trending up here. Okay, and then you can add to the position as you get, and especially when MACD crosses over the zero line and you get a buy signal from MACD, then you can add to the position. But a more aggressive strategy would be to start buying in this area here, okay? So insofar as trend is concerned, we can see that we have an uptrend by many of the indications, the indicators that we have here, the few that we use anyway. Now, what about momentum? The momentum indicator I use is this one created by Jerry Appel himself. It's called a triple momentum indicator. He uses a 5, a 15, and a 25 period, and I'm using it on a weekly chart here now. Now, it's interesting to note that since the triple momentum indicator crossed below the 4% line where this arrow, down arrow is, right? It hasn't really given us a significant cross above the 4% line again. This was a false breakout here, right? Until now, it seems to be giving us a more convincing break above the 4% line. So the momentum has been increasing, and now we're getting a confirmation of the momentum being to the upside by being above the 4% line. That's the momentum indicator. Now, as I said before, MACD histogram can also be used as a momentum indicator, trend momentum, combination of the two. And you could see that that's where we discussed this already. It's been trending up, and now it's above the zero line. What I'm noticing here is MACD histogram, the histogram bars themselves are much higher than they've been all during this downtrend from this area here, okay? From this area here in January or so, right, in December actually, we haven't had MACD histogram giving us these larger histogram bars. That to me is significant, okay? So we looked at the trend, we look at the momentum, and now we look at the accumulation distribution line. And this is Larry Williams, he designed the indicator, whether stocks are being accumulated or distributed. So we're looking at the index here, the S&P index, and you can see that since it crossed below here, since the accumulation distribution line crossed below the moving average, the 57-week moving average, in April, we haven't had a cross above it, but it looks as though we're ready to do that. With any luck this coming week, we will do so. With any luck that, the trend continues, right? We will do so. So that's insofar as the weekly trend is concerned, the momentum of the weekly trend, and the accumulation distribution indicator that Larry Williams designed. Now, if we go over to Jake Bernstein's chart, the so-called MAC or moving average channel, as you probably know, Jake uses, let's see, let me be sure I got the right thing here. No, I have to change, wait a minute, I'm not using Jake. This is Jake Bernstein's moving average channel indicator, moving average chart, okay? Now, he uses this in a number of ways. The green line is the 10-week moving average of the highs, right? The 10-week moving average of the highs, and the red line is the 8-week moving average of the lows. And you could see that since we had this downturn here in January, okay, on this weekly chart, January 21st, notice how it coincides with this big bar here, coincides with the arrow down here, with the arrow here, where the triple momentum indicator crossed below the 4% line. So all of these were occurring at the same time. Right now, though, on the weekly chart, we have a setup of two complete successive bars above the 10-week moving average of the highs, right? Two complete successive bars above the moving average of the highs. That's a setup. Now, we don't have a trigger which would mean that the 80 line crossed above the 57-week moving average. We are waiting for that to occur. And as I said over here, should that occur, we will have a setup and a trigger to buy the S&P or to buy the market. In other words, to give us confirmation that we are now in a really good uptrend in the S&P and the general market, using the S&P as an example of the general market, a very good example of the general market. So we saw these other indicators already. No need to belabor the point there. We will now go. Let me just pause here, have a drink of water. So we're now going to look at the daily chart of the S&P 500. Let me blow it up here a little bit, make it a little clearer. You can notice, I noticed a number of things here. On the daily chart, what is this here, June? Okay, on the daily chart, let's start with the moving averages again, as we usually do. So we had a crossover, the 4 crossover, the 9 here, and that was what? That was June 27. Okay, this was the June 17 low here. I think it's June 16, June 17 low, right? And we had the 4 just briefly cross above the 9 here, stayed alongside pretty much, went up a little higher, came down, just running pretty much parallel with it here, and then made a more convincing cross above the 9. And at the same time, the 9 EMA crossed above the 30 weighted moving average. Okay, same time that the 9 crossed above. So what we had here, according to some technical analysts, is the alligator is beginning to open its mouth. In other words, you got these 3 lines, the 4, the 9, and the 30 above each other successively, right, above each other, and they have not crossed back below since. We also have the parabolic currently below the most recent bars, right? Especially the most recent bar, Friday. So we have an uptrend insofar as daily chart is concerned with the moving averages, and the parabolic is telling us we're in an uptrend. We are coming out of a Bollinger Band squeeze here when the volatility is reduced or gets lower, right? And we are now trending up on the daily chart. The other trend indicators that I mentioned before when we were looking at the weekly chart is the ADX. Now on the daily chart, we have the ADX trending up, and this has begun to happen right about here. Okay, right about here, which was July 27. We were getting confirmation of the uptrend. We were getting a bit of a crossover of the DI plus above the DI minus back here, which was July 20th. And then we got a real good confirmation back here around the 27th to 28th, right? So on here. So ADX is currently trending up and DI plus is above DI minus. So insofar as the trend is concerned, we are getting confirmation of the trend from the ADX indicator. Okay, we had it from the moving averages and the parabolic, and now we're getting confirmation here from ADX. We also have MACD that gave us a buy signal way back here and on June 27. Okay, I think it was a little earlier. If we blew this chart up, we might see, no, it wasn't. It was June 27th. June 27, we got a buy signal on the MACD histogram. And since then, it's remained above the 0 line, which means that the bulls are still in charge. Okay? Now, so we have those indicators of trend telling us we have an uptrend. What about momentum? Well, momentum change here when the sum of the rate of change indicator, triple momentum indicator, crossed above the 4% line. And that was on July 20th. Okay? You can see that's what happened here. And we hadn't had a convincing cross, above this 4% line until we were all the way back here, in March. Okay? So this is significant here because the momentum is now to the upside. Now, so we have trend and momentum in our favor, uptrend, momentum upside, coming out of a squeeze. And we're looking now at the third thing that I usually look at to begin with, and that is whether the AD line is above its moving average. And you can see that it crossed above its moving average July 21st, right here, crossed above the moving average. So at this point here, we had all these indicators signaling an uptrend, momentum on the upside, increasing, and the 80 line above its average. That's now on the daily chart on the S&P. Okay, so we have that to look at. Now, if we go over to Jake Bernstein's chart, is this Jake's chart? Yes. If we go over here on this daily chart, you can see that the 80 line crossed above the moving average back here. That was on July 20th, around the same time that we were getting signals here, right? On the other chart, on this chart here, we were getting signals right around here, the 20th, right? July 20th. And at the same time, on Jake's chart, the 80 line was above its moving average here. So we had a setup, and we got two complete successive bars above the moving average of the highs. So this was a trigger. We had a setup here, and we had a trigger. So Jake's chart was giving us a buy signal on the S&P back here on the daily chart, and that was back in July 21st. Well, since then we've been trending up. Okay, now I want to look at something that I learned from an article in Stocks and Commodities. Since we're looking at these TC charts, if we look at a weekly chart, with the 30 weighted moving average and a regular 30 simple moving average, the article was pointing out that the 30 moving average, okay, is a very good support resistance line. I use the weighted moving average, and it's even closer. Gives you less whipsaws. It's even closer. So you could see that if you were to be in the market when prices are above the 30 weighted moving average, you have a very good uptrend. You could follow the uptrend. And now, when price fell below on January 21st on the weekly chart, that was the time when the trend changed. And you could see that prices remain below the 30 weighted moving average. In fact, the 30 front weighted moving average crossed below the simple moving average here too. So confirming that we entered a downtrend in January. Okay? Now though, you could see we began an uptrend back here. We began a new channel of prices. Okay? So I just wanted to point that out, that we are now above, on the daily chart, we are above the 30 weighted moving average again. So if we go back here, you can see this is the 30 weighted moving average, right? The green line. And you can see that about here, and that was July 19, we crossed above it. Price was above the 30 weighted moving average. But this is a daily. Why don't we have to put a weekly up. On the weekly chart, you could see that we're just crossing above the 30 weighted moving average once more. And when prices are above the 30 weighted moving average, you are in a distinct uptrend. You could see it all the way back here, all the way back into 2000, above the green line, right? Above the green line, above the green line. And then we broke down right here. We broke down in January 21st on the weekly chart. And since then, it's been a downtrend. Now, for the first time again, prices are breaking above the 30 weighted moving average. So it seems to me that we have a very good chance of going higher. But let's look at what could go wrong. How could we be wrong on all of what I've just said, right? That this thing about an uptrend here is all for naught. When will this end, in other words? What are we looking for? What could happen so that this trend no longer exists? Well, we're approaching on the daily, wait a minute, on the daily chart, we're approaching the 200-day moving average. That just happens to be at the same price. Notice the price here is 43.34 or so, 43.34 to 43.35, right? If you go to the daily, that's on the daily chart. And if you go to the weekly chart, the 50-week moving average is 43.39. So the 50-week moving average is very analogous to the 200-day moving average on the daily chart. Okay? So on the daily chart, it's 43.31, 34, something like that, 43.30. So this is where we're going to find resistance. We are approaching that. And that's why there are some analysts who are saying the party is basically over. This is as much as, they're going to take away the punch bowl and close up the doors. the bar is closing time, because we're going to get here and we're going to come down again. Well, okay, so if that's the case, we've got to pay particular attention, especially on the daily chart, to our stops, okay, and to some of these indicators here. We have to pay particular attention to that. We don't want to get caught, with the proverbial pants down. So this is where we're going to find some resistance at the 200-day moving average, 43.35, okay? It just so happens that I also drew a triangle back here. I drew a triangle using these prices here. That was the upper line of the triangle. This was the lower line, right? And I calculated a target 43.69, and that's not too far from this level here, okay, 43.37. So in this area, we're going to find some resistance. The big question is, do we penetrate that and go higher? Or do we find so much resistance that the trend is over and we come back and test some of the previous lows? We don't know yet. We have to wait for that. We have to wait to determine that. Nobody could tell us if that and when it's going to occur. Okay? So that's where we are. Let me take a pause here. Now, I have the daily chart here of the S&P still, and I just want to point out a couple of other things quickly, because I've already exhausted a lot of time here. But I think it's very important. So the question might be, how do we protect ourselves? Well, you could have stop loss orders, or at least know where you're going to get out. The other thing is, if you see this 4 EMA on the daily chart crossing below the 9 EMA, that would be one indication that maybe, just maybe, this trend is in trouble, coming to an end. Okay, so that's one thing. The other thing is, if and when we get in this region here, somewhere near that 200-day moving average, which will be between the 3 and 2 standard deviation levels. That would be representing, would be an indication of an overbought condition, because the standard deviations are really a very good indication of overbought or oversold conditions. So yeah, if we really, especially if we get close to 3 standard deviations, which is 44.17 at this time, you might want to take some profits off the table, take some chips off the table. Okay, so those are some of the things that I would look for. There are a lot of other things, but you could look for candlestick patterns like a hanging man, which would be like a hammer, at the top of the trend. Okay, where's a hanging man? Something like this over here, right? A hanging man, where you get a hammer, something looks like a hammer at the top of a trend is a hanging man, and that could signify the end of that trend. All right? So those are some of the things to look for. All right, let's pause. Okay, so I'll just show you the daily chart of the NASDAQ. Very similar to the S&P, and why shouldn't it be, right? I want to point out one last thing here as we go along. Recently, I've been looking at fractals again. Years ago, I did. There's a guy called Bill Williams, I think is his first name, Bill. But anyway, you can go to Google and Google his name and fractals, and you will see him show up there. Some of the old YouTube videos are in black and white and a little difficult to follow, but that's how I follow it anyway on the YouTube videos. So this is a fractal because you have two lower highs before the bar, this high. Before this high, you have two lower highs, and you have two lower highs. This one is lower. Two lower highs before this. So what you do is you put your stop loss, your buy stop order just above this high here. So maybe 50 cents above it, 20 cents above it, and it gets filled in this area here. Okay, and then it's the next bar, of course, you have a nice little gain. What else I want to tell you about this? Yeah, so that's fractals, and I've been using it once again. Years ago I did, but I've been following them again. Actually, I noticed that these are like swing highs. You see this here? This is what the IBD or Investors Business Daily people would call a swing high. So from a cup and handle. See, this would be a cup. This is a handle. And this would be the swing high. And so you'll buy above the swing high, this high here. All right, so it's analogous to a swing high. All right, let's go on to something else. Okay, now before we go to Shaken, and I'm going to go to Shaken after this, I want to show you a chart that Larry McMillan uses, and he recently pointed out that this chart of the VIX, the CBOE VIX, when the 20 moving average on the daily chart crosses below the 200-day moving average, this is usually a turnaround in a trend. So we're getting confirmation of a trend here. If we go back further, we'll see that this is when back in what is this, August of 2020, okay, we had a nice uptrend because the 20 crossed below the 200, right, and it stayed there. Then come December of 2021, right, December of 2021 here, the 20 crossed above the 200. The magenta line crossed above the yellow line, the 200, and that is exactly when the downtrend started, right? And it remained above the 200, and Larry McMillan was saying, well, I'm waiting to see when this is going to happen, because this will really make a difference in terms of whether we are still in a downtrend or not. And so now we have this 20 trending down after crossing the 200-day. So I say, hey, this, thank you very much. Thank you very much. I'll take it, you know. So that's what I wanted to show you there. And now what I want to do is to go to the scans that I've been doing. One scan that I do is, I'm going to show you the conditions of the scan. The first condition, come over here, right, where my cursor is on the right. And one condition is the Jake setup and buy signal or trigger. So if the 80 line is above the 57-day average, you have a setup. And then if you get 2 consecutive bars above the moving average of the highs on the daily chart, you get a trigger. So these 2 bars was a trigger to buy this stock, whatever it is, Ingersoll Rand. And so this scan gives me the stocks that meet these criteria here. 80 is above the 57-day and 2 consecutive bars above the 10-day moving average. That's what this first condition is. I don't want very likely trading stocks. So I look for stocks that are trading at least 500,000 shares a day and at least $10 a share. And I want momentum to be on my side. So I want this momentum, triple momentum indicator, to be above the 4% line. And that's what this is. And of course, we saw that the 80 line is above the 57. So we're looking for that condition. So we have trend, we have Jake Bernstein's conditions to buy, etc. Now, what I do then is I put this combo, I call it a combination scan because in addition to Jake, I have the momentum and so on. A few things that Jake didn't use, right? So if I go over here and I go to the short list, right? The short list, last week's short list, okay? And how they perform for the past week, you'll see that they perform very well. I mean, this stock was up 23%, RNA was up 19%. I don't own some of these. I own this one, I own this one, I own this one, I own GWW, I own CVS, and I own Apple and Microsoft. So the fact is that I am buying these stocks. I'm eating my cooking. Okay? And if I showed you my performance for last week, you would know that it was commensurate with this nice looking dashboard here. So this is how we did last week. There's another scan I do with fractals. And this is what I had for last week, and this is how they performed. The fractals scan performed very well too. There were very few bullish or very bullish, you know, but I own a few of these. I don't own too many of them, but that's how the fractal performance was. Looking for that. I had a list called the best short list, and this is how they performed last week. Okay, very few bearish ones that lost money last week. Most of them made a lot of money, anywhere from 2% to 23% for the week. And if you look at the dailies, you'll see that this was up 15%. I don't own this one, but you'll see that they were up nicely too, you know. All right, so these are now, so that's what we did last week. What about this coming week? Okay, well, I just put on the combo scan for the 14th. Okay, this is the whole scan and how these stocks did last week. These are stocks that are meeting the scans requirements for next week, and this is how they did last week. All of them were up. Of course, we had a great week last week. So what I'm going to do here is notice that IRM, you could actually stop the video and I will I will page down and give you a chance to get the next page, etc. So I'm going to page down. You could actually copy these or whatever you want to do, and I'll go down. IRM will be at the top, and I'll give you this page, and this is how these stocks did, right? And give you a minute to either take a picture of it or you could stop the video. And BAC, Bank of America, was the last one. And so I'm going to bring Bank of America up here. Where is it? There. And you could see the next list here. There's a number. There are a lot of them. There's 170, about 190 stocks that meet the combo scan for this coming week. And this is how they did last week. Okay? So let me do all but DE all the way down. DE, where's DE? DE is down here. All right. So this would be the next part of the list. I just bought this stock, PWR. I bought it probably on Friday. You can see this is it. Goldman Sachs was the last one here. So I'll give you Goldman Sachs down. This is a whole list, right? And you can pick. Now, what I do with this list is I like to buy the bullish or very bullish stocks. The one in green, right? That has a green rainbow. ADM. So you could see this is there's so many of them. I'll just go down to Ben. BN was the next list. I own CVS. Intuit looks very good. I think I showed you all with this. So these are the next ones. Apple is on the list. It was up 3, almost 4%. JNPR. So this takes us down to the bottom of the list. Accenture is looking good. I put it on the short list for this week. Microsoft is there, etc. Okay? So that's what we got. Then I made up a short list of stocks, of those stocks that I thought looked pretty good for the coming week. This stock is a solar stock, and I want to show you that list. I have to remember to show you. This is a stock involved in lithium. Okay, so it's related to solar, right? Solar batteries, energy, etc. And you could see these are the stocks now, how they performed last week, but these are the ones that are bullish or very bullish, and I have on my very short list. Okay, that's it for the short list. Notice Microsoft is there, Accenture is there, Cummins is there, Apple, DHI, CVS I own, etc. Right? Archer Daniel Midlands is here, Power I own, MCK I own, right? Etc. So this is what I'm looking at. Now let me show you a list that you might be interested in. Where are these solar stocks? Solar stocks. Look at this list. All these stocks were up for the week. Okay, these are all solar related stocks. Okay, ALB is a very good one. I own this one. I own this one, and I own this one. I own these 3 here. Okay, but I'm considering buying this. So this is how they did on Friday. If you want to see, this is how they did on Friday. These are damn good stocks to keep on your list, on your shopping list, okay? That's how they were on Friday. So that's what I wanted to show you. If I go to my master list, show you how my master list is doing. These are stocks at the top of my master list. The best performing on Friday. And why don't we look for the past week? You'll see that these are the stocks best performing. I just bought Dillard's again, DDS, okay? I just bought it again. These are the stocks on my master list. And you could take a look at this, okay? LNG is there. Oh, I just bought some LNG and GLNG. Okay, those stocks I own. McCormick I own the bullish and very bullish stocks here. I own some of them, you know, many of them. Or the other way around. this of the stocks I own, all the stocks I own are rated either bullish or very bullish. And this is how they did on Friday, you know. These are okay. All right, I think that brings us to the end of this little video, and I wish you good luck in the coming week. If you have any questions, just send me an email, and I will be glad to answer them. Okay, those of you who have my email address, and we'll end the video here. Have a good weekend.